into the next question, technology as an enabler. I think we heard it in the previous panel as well that, the back-end technology, all of that is very, very important. And what would be the sort of, if you were to like name one or two things that would really be from a technology point of view, some of the things you've seen, what would you look at that as being an enabler as you look at investments in businesses? And just an example of a great technology solution, if you have one, that you could have looked at from as an enabler in the business.
I think some of the tech guys would be able to answer that better. We've looked at some of the more brick and mortar stores, and but to Hemendra's point on home delivery, other great enabler of profitability has been trying to sweat your asset better, which is a typical brick and mortar concept. So increasing day parts. So now you're seeing that like restaurants which typically do business in the evening, they're trying to cross-sell something for lunch or something for breakfast. You're sweating that asset better, leasing it out to leasing out working space to your startups. Those kind of innovations are coming in just to sweat your human assets as well as real estate assets better.
That's a great point, and maybe it'll be interesting to see if there's some options on that. Hemendra, what about you?
Yeah, so food tech to me is a very misleading term. So the two components to it. One is the front end, which is clearly the app and the e-com, the way you want to define it. So if you look at the front end food tech, it is clearly your ability to reach out to more number of customers. I think that is all about it. I think it's clearly opening doors for everyone. I think it's probably for any food services brand, it won't be a choice. It won't be a hygiene factor. It won't be a wow factor anymore. It will be a hygiene factor. You have to tie up with likes of Zomato or Food Pandas, otherwise you're out of the business. So I think that is one in terms of reaching out to more customers and getting more out of the same customer. There's another food tech which is on the back end side. And I must say, the kind of central kitchens I've visited, it is quite advanced. We don't realize it. I've seen paratha making machines. I've seen bun making machines. I've seen curry making machines. I've seen chicken slaughtering machines. So there's a lot of automation happening at the back end. And even the wastage gets recycled. There are technologies available for that. So I think the front end tech is driving the scale. The back end tech is driving the margins. So I think the entrepreneur sitting in the room should definitely evaluate the automation part of the food business. There are potential, there are vendors available in India and all over the world now, where you can automate almost each and every process.
Yeah. And I think that's also a space to look at. We all look at the sexy part of the front end food restaurant business, but the back end, huge opportunities there for entrepreneurs as you're looking to scale up. Because that part is the sort of the soul of the business, right?
I just like to supplement one point of Hemendra. On the back end, now the technologies and people who are offering those solutions to reduce your kitchen footprint.
Absolutely.
Absolutely. Which is a huge thing.
It's a huge thing.
Just talk a bit.
Yeah, so if you look at this sector, the way Hemend really touched it, that was the right way. There are two facts to the technology in this business. One is the B2C technology and the other is the B2B technology. Now in B2C technology, what really is very important is getting more out of the same consumer. Because there is dispersion coming into the market. For every one consumer where it used to be one brand, now there are 20. So there is a huge dispersion. How do you make money out of this sector? Not just the entrepreneurs, including the PE players who have invested behind them. So considering this dispersion, you've got to get more from the same consumer. This is one of the good things with this industry is that your stomach needs 3 times 365 days of food. That's the moment of truth for this business. How do you make sure that you can get 5% of that to your business? That makes a huge difference. Now that's where your B2C has really got to come into connect. It's not just about the apps, it's not just about the CRM. To go in for the right select, to be able to target your consumer back and back again, for him to come back to you, is what this industry would now start deserving of, else it won't be profitable anymore. Coming on to the B2B side, which you rightly said, it's basically a margin driver. From real estate, which you suggested that it can reduce the real estate space for you in terms of the kitchen, to going on to the manpower, which is becoming more and more expensive. So if you just look at 3 months back, the impact of minimum wages on this industry on the margins is as high as 12%. And that's huge. So how do you basically make these more efficient, which is where the B2B technology starts coming in play. And there are solutions available, or the solutions can be basically, made into a country which is full of professionals who have their core as this expertise and which is valued across the world.
Raghav, for you quickly, just one or two technology solutions you've implemented to get scale. What are you guys doing? Because I know you have thousands of flavors of tea and talk a lot about that. So what's some of the,
So I completely agree with what Pramod was saying, that you've got the B2B side of things, you've got the B2C side of things. So on the B2B side, since our focus is on customization, we offer over 12,000 kinds of varieties of chai that you can make on the spot. It's very important that we are standardizing and automating the techniques that we use. So that is an ongoing process.
Are all those ingredients at the back end all standardized?
So all of that standardization, and even in terms of the process that is involved while making the chai, to ensure that an adrak tulsi ilaichi chai tastes the same. Whether
Achar chai was very nice.
Okay. So that's on the back end, and when I talk about the front end, we use a very data-driven approach to kind of personalize things for our customers, to give out interesting offers through loyalty. So there's a lot of back-end analytics that drives how we can consistently keep in closer touch with our customers and add that level of personalization.
Great stuff. And moving on now, just I think the last two questions. One is that if you were to look at India, how is India different as a food business versus other developing markets? Pramod, this time I'll start from you guys on this side. What is different with India from that perspective? How is it more difficult compared to Malaysia, Indonesia, Middle East, other developing markets? Forget the developed where the growth is very, very tough. But
so, the challenge in India is where the opportunity really lies. Every 5 miles, the demographics vary, which basically is suggestive of, let's say if I was to take an example of chayos, if they are basically present in golf links, where chamomile may be doing the best numbers, they just move 5 miles away from that and reach something like Kalkaji or Lajpat Nagar, wherein they would not find really a consumer for chamomile who can afford $250 for an infused tea. So the demographics have varied. What really happens in Lajpat Nagar is, for every one consumer that they get in golf links, there would be 10 or 15 in Lajpat Nagar. So, you are basically playing against AVT and ADT, trying to make your numbers work. Now, that is one of the challenges, but it is it's an opportunity also into the country. A lot of times we tend to forget the technology today is at least that much advanced that we can offer dynamic pricing with something called a near field communication process, which is very easy to do. So, which, in the few months or the few years to come, you will find would become a reality, and that is really going to change the landscape for the country. In effect, it is to suggest that it's a perishable seat that is going out of your restaurant, which can be sold at a 50% discount if you have 60% gross margins. So theoretically, if you go on giving discounts on the go, on the offer, right in the next 10 minutes and so on and so forth, this will become more of, this would have more takers to it. So other than that, when you look at...
any example of, have you invested in any food business outside of India, or do you look at investments in Malaysia, Indonesia?
We have investments in Indonesia. So we own Burger King in Indonesia. We have Domino's in Indonesia.
And how's that different to
So
India?
when you look at India, the way the consumer story is unfolding into the country, the growth that it offers, Indonesia unfortunately would never be able to offer that sort of a growth.
Yet you have the likes of Yum and all scaling down restaurants, same store sales is not happening. So is it like a phenomena that it's only happening in big cities?
No,
and in tier 2 cities?
In fact, it has started from the matured economies. If you look at the impact of dispersion, as we call it, the impact of dispersion has come in from global economies, wherein the same store SSS growth is basically negative in many of the economies across the world. So it is not something new to India. But India can potentially arrest it, especially the good formats, provided they are able to have the technology-enabled platforms working for them.
I mean, any thoughts on that?
Yeah, I think it's been a fascinating time for the industry. If you look at last 3 years, India in particular, I would say the lines between packaged food, food retail, food service, and food delivery, they're blurring. You really don't know where one ends and another starts. It's like 2G, 3G, 4G coexisting. And as an investor, you really have a nightmare. You know, where to put your money in. Because the challenge we have as an investor in this situation, what you're investing today, which is the trend, may become obsolete by the time you're exiting the business. So that is the pace of change. I think this is remarkable.
That's probably across many sectors.
And look at the disruptions. And the disruption I often quote in my conversation on the industry is someone like Hola Chef. They're converting homemakers into home chefs and home chefs into home entrepreneurs. So basically home kitchen is becoming a reality in India. Who would have thought 3 years back that we will have homemakers serving you food in your corporate offices? It's phenomenal. So I think that if there's a place for disruption on globe, probably India is the place.
What about yourself, Rahul, in terms of any thoughts around that disruption and what makes India different to, say, another developing market?
I think what makes India different is that we are barely scratching the surface here. You know, there's such a gap between the market which already exists and what the industry is. And what I mean by industry is the organized industry. The food service sector as a market is estimated to be more than 80,000 crores. Of that, the organized industry is barely 8,000. It's 10%.
That's amazing.
And the overall market itself is growing. And plus the organized industry, which investors such as ourselves would back, would be taking share from the unorganized sector. So the scope for growth is immense. And this sector is just ripe for technological disruptions, just like what Himen spoke about harnessing the unorganized sector, which are like, you know, the housewives, channeling them through a technology platform and giving them a wider audience. It's like creating a food Uber.
Phenomenal.
It's a blue ocean. And you will see many of these disruptions coming in, and anybody who latches onto that trend in time would be sitting on a jackpot, literally. And that's what's attracting so much money and interest in the sector.
So quickly, one last round of Pramod, starting with you this time again. Just in terms of one big challenge that the industry faces as an industry, the food services sector, is it higher wages? Is it the higher service charge? Or all of?
In my opinion, it's the entry barrier to this industry, which is actually the entry barrier to this industry. So what really is happening in this industry, and especially the dispersion thing that I've been talking about, is anybody can come in, open the business, take away 5% of your business, and then close it. But that 5% basically kills the other business which was really doing well. Now that dispersion is happening much sooner, and the closures are also happening that sooner. But both sides of this coin are actually disturbing the industry. So to me, that's one of the biggest.
So you're saying the
factors.
Barriers?
There's virtually no barrier to
enter. Anybody can
Anybody
set up
can enter.
And
So
shake up
you
the
know, if
system.
someone's dad has kept some money for him, he can start it. If someone has popped out and left some wealth out
And what
there.
would be a recommendation for that? How do you address that?
So you know, it's very difficult to address that, and this is only time would be the factor wherein the men's and boys would get separated, and this would achieve an equilibrium state. So till that time, you got to go on playing the cards.
Playing the churn. I mean,
For me, the biggest challenge on the operational side in India, rentals. I think it kills you. And Raghav will endorse it. Second is manpower. I think it's a big challenge, you know, to train, to recruit, to re-recruit.
at 20% churn, one-fifth
At
of your
20% churn, all the time you are more of a training academy than actually a restaurant chain. So I think
There's an opportunity, you know, training for
so I think
restaurants.
this is Skill India campaign should definitely look at manpower challenges for this industry. I think on the business side, it is clearly the novelty issue. You know, customers are getting bored of new brands so quickly now. You know, every time you go to mall, you want to try a different
Product life cycle
restaurant.
is shorter and
So
shorter.
how to keep customers alive with you sort of is a big challenge. You have to reinventing yourself, keeping the brand positioning intact, etc. I think that's one big challenge.
Okay, Raghav, from the horse's mouth in terms of.
Yeah, I think the biggest challenge we face is rentals. Real estate, getting the availability of those locations and the kind of rentals that we pay. I think.
Are your rentals normally fixed? Are more and more landlords happy to look at a revenue share model, or do you?
So people are now looking at revenue share as a model, but that comes with a minimum guarantee. So. Yeah, exactly. So.
What about you, Rahul?
Good one. I think it's really execution for me, because there's been traditionally, too much of a slip between the cup and the lip. That's always been the challenge, and for that you need good managers. We talk about the workforce, the blue collar workers, so to say. I think the quality of manpower per se is not bad, but what you need are inspirational line managers, and there's a huge shortage of those.
But is there also a thing that, I mean, when I look at a lot of the restaurants and so expanding, they're not spending a lot of time setting up these McDonald's, that Bible, and we have cases of that. You just cannot walk away from that concept, right? You can put it on a phone, you can technology, you don't have to take manual. But I don't think people want to make that effort to do that. It just takes a lot of time.
It also takes a lot of skill. The intent is always there. I think when you make a strategic plan, I don't think anybody goes at it as a cowboy. You always think you've planned it,
But
the
not
fact
not
is
enough.
You haven't planned it enough.
Okay, so with that, I think we sort of come to end of the session. A few questions, if anybody has any, we'll take 2 or 3. I don't know how we are running for time. I guess we are a bit behind in any case, but just 2 or 3 questions. Just say who you are and what your question is.
Hi. So here. Good evening to all of you. One quick comment for Raghav and then a question for investors. Raghav, I'm one of your earlier consumers and you made tea sexy. So thank you very much. I love Chayos. Now, question to the investors. Now, how, the nutshell of the question is how risk averse are investors, or how much risk do you take? I'll give you an example. In the restaurant, in the food service business, there is always a template that, if you're opening a restaurant, there are around 20 odd permissions that you need to take. Your food cost has to be a certain percentage, the rentals have to be a certain percentage, and any disruption that would always happen will happen in a certain line of that value chain. For example, if you spoke about Hola Chef, then you would say, hey, my manpower cost me a certain percentage, how can I disrupt this and get home chefs to cook it? But there's a risk to it. These home chefs don't have FSSAI approvals. Similarly, if I am getting out of a rentals business, if I'm taking it on wheels, maybe a cart like you spoke about, or maybe food trucks, we have laws, and we have laws that are silent about each other, multiple laws that are silent about each other. So would you, like you compare food and Uber, Uber operates on vague laws. Would you have the guts to actually put your money in a business where there are vague laws?
Okay, any of you?
Answer is no. I don't think so. I think it's a big challenge. Frankly, none of us are managing our own money. All of us are managing third-party money, and it's all institutional money coming from pedigreed investors. And if any one of them finds out, I think we are out of job. So it's very unlikely. It's very unlikely. Having said that, I think apart from the regulator risk, I really can't comment on that. We have to take it as it is. But if there are management risks, as you rightly said, let's say in Hola Chef model, there's a risk of the certifying the home kitchen. But if there are ways to audit, certify, and make it more compliant, I think it's how do you manage those risks? Ultimately, risk is inherent to any equity investment. Is how do you manage, how as an entrepreneur you manage those risks is more critical for the investors.
Two here. Let's take last 2 here.
Hi guys, my name is Mani Sidhu. I'm from Los Angeles, but I live in India. My question is this. Let's say you guys have a hot concept. I mean, this is it. It fits all the criteria. It's great. How many units should that hot concept deploy where as an investor, you would look at it as optimal for you to invest in? So would it be 3 units in one city, or 100 units, spread across 20 cities?
Also, is it a unit exponential or a value question.
Yeah, and unit is a restaurant.
It depends on an investment to investment. It could be from a single unit. It could be from an idea generation. It could be 200 units. So there is no set formula for that. The investment would be dependent on the proof of concept, as they call it. It could happen even from a single outlet.
Just one more point on this, I think in general, as a thumb rule, a carpet rolling is always preferable if your business is clearly back-end dependent. If you have a central kitchen in Delhi, and let's say the potential is, let's say, 50 stores, there's no point opening 10 stores and moving to Mumbai, because that economics hasn't really set in. So we believe that, back-end economics is key. So probably carpet rolling works better in some cases, not everywhere.
Hello? I've got a question for Raghav. So I'm Abhishek from Middleby. Raghav, many congratulations for putting in Chayos.
Thank you so much.
We all talked about reinventing the wheel with 12,000 types of tea. You don't need to do it for some time at least. My question to you is mostly about the food. So while you're talking about back-end automation of your beverages, how about food? What is your take on automation of food? And how are you going to implement it with the plan that you have for future?
So we primarily work with a central kitchen kind of a model, and that central kitchen would be a hub and spoke model. It would be a hub in a Delhi NCR. It would be a hub in a Mumbai. It would be a hub in a Bangalore.